In this video, we're going to look at how I've been doing on my little tracker of my dividend investing. I'm going to have a look at my own personal milestones that I've set and how I plan to get to £1 million invested. Welcome to Destination Wealth. We're going to have a look at a little spreadsheet that I've got on Google Sheets and how I track my investments each year and little milestones that I set, targets if you like, for each year to see whether I'm nearing them or not on my road to £1 million invested. Before we get started, just like to say none of this is investment advice. It's just my own personal story and the investments I've picked. Some of them not been so good, some of them been great, but please do your own research. Seek out the advice of a financial advisor. If you want to invest in individual stocks, you need to do a lot of homework. You could just invest in ETFs and index trackers, funds, that sort of thing. And as I'm getting older, it's the sort of thing I'm starting to think of transitioning more into rather than individual stocks to have a bit more diversification. So let's get into it and have a look at this spreadsheet. This is my Google Sheets spreadsheet that I use, and I've only gone back to 2017 because I just haven't finished filling it in going back any further. So it's only a recent thing I've done. But what I've got in here is I've tracked it from the 1st of April. No, I don't know why I've done it from the 1st of April, which is when I first started doing it, going back 10 years or so. So I just carried on doing it, and I've put in the age that I was on the 1st of April each year, how much I deposited, so how much of my own cash I paid in each year, and the target balance of where I want to be, target that I want to be at that time, and where I actually ended up. And the increase, and then whether I'm on or off target, which you can see it's not been great the last couple of years, but let's check it out. So 2017, the age of 43, that year I deposited £12,486 of my own money. My target was 108,320, and I hit 108,320. Now, the reason that's the same is because it's the first year that I've done it, because I haven't gone back further and filled it in. So I just put it as the same target for that one. So we'll kind of discount that. It was just the starting figure. That 108,000 is across all my accounts. So that would be my SIP, my ISA, bit of crypto, which I don't know if I even had any back then, maybe a little bit, and my personal pension. We can see the next year I paid in just shy of 12,000. My target was 126,000 and I hit 126,000. 2019, age of 45, I deposited 14,846 and I wanted to hit 150, and I actually hit 157. So that was an increase of 31,000 on the year before. 2020, 46, I'd only paid in 11,798, so about £1,000 a month, just shy. Target was 200,000, and I fell short of that at 167, but an increase of 9,000. So I was down that year because I'd actually paid in that much, but I only increased it by that much. 2021, paid in 14,000, well, just shy of 15,000. Wanted to hit 250, and I've got across here, but I was pretty much there. So you can see I was down 9,000, 10,000 pretty much the year before. But that year, 2021, I pulled it right back and increased it by 81,000. Now that was an increase of 81,000. I only paid in 15,000 that year. So that was fantastic. Yeah, I didn't hit my target, but it's all going in the right direction. The following year, paid in 16.2, target of 275, just shy 267. Again, increase of 18,000, but I only paid in 16. So not amazing, but not too bad. Age of 49, paid in 16,000 that year, target of 300,000, just shy of 274. But you can see how this is really nicely growing. So only up 6,800, but not from what I'd paid in. And then last year, paid in 16,000, target 332, hit 305. So it's all going quite well. You know, I'm paying in just over £1,000 a month. Now I've reduced that quite a lot recently. But again, only paid in 16,000 and was up 30,000. Now some of that's capital appreciation, some of that is dividends. And whenever I get paid those dividends, I just reinvest them straight back into the same stocks that paid them to me. It's called a dividend reinvestment plan. All companies pretty much do it, like Hargreaves Lansdown, Interactive Investor. They'll all have this scheme where you just advise them that as soon as you get paid the dividends, they just reinvest them straight back into the stocks you paid them out. It's just quick and easy. It's very low fee. So that's where I am. I'm, on that, on this one here, I'm at 305. Now we're into 2025 now, and I'm up to about 320. I was at 350, but we've had a massive drop in the stock market, and it's dropped hugely. On monetary terms, it's only about 6-7%, and I'm ready to deploy my money back in. I've got a bit of cash sat on the sidelines from some stocks that had buyouts, and I had the money in the account. Because I'm 50 now, I'm going to start diversifying more into ETFs. I want to buy a Footsie 250 tracker, ETF tracker that pays dividends, and I also want to buy an S&P 500. They've both dropped so much in the last month. I feel now's a good time to get in and just hold them for the long term. So a lot less homework you need to do than buying individual stocks. And I love doing the homework. I love buying individual stocks, but you've got to keep on top of them. And I've had some disastrous ones in the past. I've had some good ones, but I've also had some disasters. And I know, looking back over the years, if I'd have just invested in ETFs from the beginning, I'd probably have double that amount in there now. But hindsight's a wonderful thing. If you want to see exactly how I received £1,500 in passive dividend income in just 1 month back in January, and the stocks that I owned that did that, how much I owned of each of those stocks, how much each one paid me, and how much I expect each one of those to pay me as long as I hold on to them for this financial year, this calendar year, then just check out this video next.